Well, thanks everyone for coming out tonight. I mean, this is a topic that we spend some time discussing in terms of what do we want to talk about, right? We just came off of Blockchain Week in New York. I'm sure many of you are still hungover from that. And hopefully you learned some stuff. But if not, today we want to kind of talk about what do we do, what's next, how do we bridge the gap. And more specifically, we're not going to talk about ICOs, STOs, and all type of stuff. We're really going to start thinking about, because many of you, and I know you personally, are involved either in the banking industry, have been traders before, and so forth. So as we start thinking about cryptocurrencies, digital assets, and ultimately how that becomes another asset, right? Another financial asset to trade. Well, what are the things that we need to think about? So before we even start jumping in, I do want to give my speakers today an opportunity to introduce themselves, 2 or 3 minutes. Tell us a little bit about yourself, what you do, and then we'll get started right into some of the questions.
Sounds good. My name is Harumi Rata Thompson. I am very happy to be here, so thank you very much for inviting me as a panelist. I have currently I have 2 things going. I have a HUD consulting, where the expertise is business operations. But lately, I pretty much focus on emerging technologies such as blockchain, artificial intelligence, cybersecurity, and on a little bit on the side, a space. And as sort of a second job, I have a space company where we're trying to bring down the moon and Mars down to the Earth. So that's an interesting side of business that I'm working on. I'm very excited. I actually started out as a banker. And I don't program, I don't code. I always approach the business from I always approach the technology from the business side. But because my first job that I did for a few years at Morgan Stanley, incidentally, is the derivatives trading. And all of us who come from that side of capital markets always joke that we inevitably end up with the digital currency of some kind. So all of us who actually dealt with that aspect of capital markets are all in some kind of digital assets and cryptocurrency today. So I have been dealing with this for a while. I'm very excited, and secondary market in particular is a passion of mine. So
thank you very much
yeah.
for being here today. Mr. Rogers.
Been hearing that all my life. Thank you everybody for coming. Thank you for Tech Connector, Angel, Yamiz, John. Really, they've been good friends over the past year. To give you a little bit more about my background, I'm the native son of New York. I really basically grew up on Long Island, went to school upstate New York, got an undergrad degree in finance, my master's in accounting. Worked at Citigroup for internship, also worked with 2 of the big 4, KPMG and EY. Started out at Ernst & Young in financial services auditing for wealth and asset management clients. And anybody that's ever been in an external audit, I mean, it's really, you learn a lot, you get thrown into the fire. Really though, I've always had a fascination with markets, and that's actually, after about a year, I had a great opportunity to move over to Blackstone, and I was in their finance group for real estate. Actually, there's a gentleman in the crowd who I worked with at a digital asset exchange based in the Netherlands, Tom Tiedemann. Tom, where are you at? He's over there. Nice.
He's networking. He will write you networking.
Everybody in the crowd probably already knows him. He's one of the friendliest guys out there. He started his career at Merrill Lynch. So in 2017, a buddy of mine, basically that I always talk markets with, in March of that year, was telling me how he was going to be buying some Bitcoin. And I had heard about Bitcoin the first time when I was senior, actually, in 2012, just watching CNBC. Really, same thing as Andreas Antonopoulos, thought it was nerd money or like it was ridiculous. And then really in 2014 when I was in grad school, I saw that Mt. Gox got hacked, and that was on CNBC. And still, I was like, oh, thank God that stuff is like complete garbage, it's fake. And then once my buddy, who I really had high respect for, he works for a premium hedge fund and a trader over there, he said that, and I really started to pay attention then. And then I was trading on my own in 2017, money that I had saved up, and really was able to time the market quite well. So it gave me the opportunity, in one of the most precious assets we have, which is time, to actually leave Blackstone. I took the leap of faith and I started working with digital asset exchange and really wanted to understand what I was trading, because anybody that's ever traded markets, you don't need to know anything about the fundamentals if you're following the price action. But I really wanted to actually stay in, because I truly believe, and I always believed, and I saw just by realizing what the other speculative bubbles, how the internet bubble, yeah, it might have burst, but guess what? The companies that came out of it changed society. And realistically, anybody that ever worked with those companies and stayed with it really did quite well, and they built out a massive network, which is what I did over 2018. That's how I really got connected with Angel and the other guys from FinTech Connector. And in August of last year, I started my own consultancy, and I've been doing that ever since then with a lot of different digital asset and blockchain-based projects.
You started Millennials in Blockchain. Don't forget that.
Okay.
'Cause I am not a millennial, but I am a member.
He is. There's no age requirement. Everybody is welcome. Actually, a good amount of people in the group. It's one of my passions. Realistically, it's a collaborative learning group that's globally distributed, and the beauty of it is that thanks to the technological advancements from Web 2, which is platforms, Telegram Messenger. How many people in here are on Telegram Messenger? Well, you are all welcome to join. It's an open private network to keep the quality high and really know the people in there. But realistically, it's like a global think tank, I guess you could say. We're all learning together, because nobody can know everything there is to know about this right now. And if anybody says that they're a true expert, I mean, be very skeptical of who they are. Really, a lot of these people come in and try to throw out jargon and throw things over your head and try to outsmart people. But if you truly understand something, you should be able to teach it to a 5-year-old.
Yeah.
And that's really kind of what we're doing. We're learning, and it's every single day. And yeah, it's beautiful.
Yeah.
It's beautiful.
So Millennials in Blockchain, if you're on Telegram. Funny story, real quick, before we jump into the actual content. I was in Stockholm last week speaking to a number of serial entrepreneurs around fintech and blockchain. And I had this presentation on just kind of general stuff about the unbundling of fintechs, and all of a sudden I get this little messenger pop up from Telegram. It said, from Mike Rogers, said, "Good morning," to his Telegram, Millennials in Blockchain. It had Millennials in Blockchain, and it said, "Hey, good morning." And everybody looked at me like, yeah, I'm an honorary member. Because everybody's looking at me, what the hell are you doing in Millennials in Blockchain? I said, I'm an honorary member. Let's just leave it at that. Let's go back to the presentation. All right, let's get into it. So what do we mean by secondary markets? And I'm going to kind of date myself a little bit here, because I'll tell you what I view as secondary markets from my many years at a top investment bank supporting a number of businesses. And then ultimately we're going to get into how that translates or starts thinking about looking at that from a crypto perspective. But when I think of secondary markets, and when I started supporting our proprietary trading desk, when we used to have proprietary trading desks at these big banks, we're talking about early 2000. They were still writing trades. Some of these traders, especially our prop traders, because they didn't like to bring themselves up to the next level, they were still writing tickets on these pink sheets, and then giving these to these ops people that would come by, collect these, and then execute on these trades. And ultimately, again, then that would kind of go through that. Fast forward a couple of years, we instituted electronic trading. Everybody started getting on these systems. But the reality is that what we really got to start thinking about is, as we're thinking about secondary trading markets, particularly outside of technology, whether moving from paper to electronics, it's what happens behind the scenes many times, right? Right now we have exchanges in the crypto market. Those things would use it. Some of us use it. I have Coinbase. Others might have other things. But as we're thinking about how digital assets evolve, we got to start thinking about what are the other infrastructure pieces that need to be in place to ensure that this market works in an efficient manner, right? And we're going to talk about how Coinbase is doing it in some areas and some other exchanges. But that's the way that I view it. I mean, Harumi, from your days like at Morgan Stanley when you were trading, what are some of the things that come to mind, particularly today, and before we jump into the crypto side, that are critically important aspects of that infrastructure that need to be in place?
So we are specifically talking about infrastructure. Okay. So I'm going to get a little bit technical with regards to what is really secondary trading, and that is when the IPO of any kind hits the market on the equity side or the bond issuance, and within a few minutes, The longest one might take a couple hours before it happens, but it goes into the stage of what we call broken. Basically, anybody in the secondary market can start trading that particular stock or bond, or for that matter, any other kind of securities. And that's when the secondary market really starts. For that to start, and an infrastructure side, yeah, I mean, a sort of middle office to back office is what really supports that activities, because then we start talking about who owns what, how much, what was the price that came in, so the auditors can come and also do the mark to market at the end of the day. I mean, all of these things, and then at the end of the year, somebody's going to be paying tax on that. So what does that really mean? It means that the reporting system, the people to know who owns what at which time, and in what price it was dealt, all this kind of information needs to be kept in the ledger somewhere. That's really the infrastructure. And then of course we are talking about very, very back end, who's going to hold on to these, whether the physical papers that we used to have, or the digital sort of just, you might be just changing the name in the digital sort of system today, who is going to make sure that the right entry is going to be made. All that needs to be kept, built, monitored, and updated, right, by somebody. And then that's really the infrastructure that we need in order for that secondary trading to happen. I grew up in the secondary market the first few years of my professional life. And it's really fun. That's what really kind of adds the liquidity into the market. So the people who are on the primary market, injecting the money into these primary companies, the companies that actually are emerging right in front of your eyes, they can secure a way of getting their return in one way or another. For that to happen, all this infrastructure needs to be built.
Just to add on, I heard pay taxes at the end of that, and it's anybody here trade crypto and was trying to do their own taxes, or did you hire somebody?
Yeah. Maybe some people don't want to disclose.
Yeah. No, that's okay. No, if they're disclosing that they pay tax, they're actually honest people. I'm sure a lot of people just, I'm sure a lot of people just swept it under somewhere because nobody's tracking. Yeah.
I tried doing it myself, and I did actually 2 weeks, and it's because really one of the biggest challenges we have right now are a lot of the regulatory agencies aren't giving clear guidance, or their guidance is conflicting against the other agencies, and that's really one of the biggest challenges. 2 weeks, and yeah, I actually did pay mine, even things that other people would say maybe you could get away with. I just did it because realistically, one thing that a lot of people might not realize, Bitcoin, a lot of these protocols, besides say privacy ones like Monero or Zcash, they're not anonymous. That's a misconception. It's pseudo-anonymous. So all these addresses can be tracked. Realistically, there's a lot of different games and a lot of things that are going on in this space that I think personally need to change, and we're already starting to see that. Regulations do exist for a reason. It's to keep order, to make sure that retail and those that are unsophisticated investors don't get fleeced like they did in the 2017 ICO market, where according to Status Research, 78% of ICOs were fraudulent. The only reason I know this is because I'm contributing to a book on digital assets, and realistically, a lot of things have to be cleaned up. These exchanges, as Angel mentioned, and actually Chairman Clayton from the SEC was in town in November, and he did a New York Times talk with Andrew Ross Sorkin from the New York Times, and he wrote Too Big to Fail. He basically said, yes, these look like normal exchanges that like you and I, or E-Trades, or Fidelities, things of that nature, TD Ameritrades, but really they're not actually behind the scenes. They're quite ugly, actually, what's going on. The New York AG put out a great report in the fall. Actually, they surveyed a lot of these exchanges. Some of them just completely disrespected the regulators and said, this is none of your business, and pretty much are going to fight it that way. Others did actually contribute and are giving data, and they're actually doing what they need to make sure that things like, say, wash trading, which is fake volume, spoofing as of 2010 from Dodd-Frank is illegal. Big banks are getting in trouble. What was it? Didn't they attribute the 2010 flash crash to spoofing? Just they arrested one guy for it, and a lot of manipulation going on the back end, and a lot of other things. And that's really, until we get this cleaned up, and regulatory frameworks and actually guidance that everybody is working with, I don't think a Bitcoin ETF is getting approved. And
let's not go that far, because
Sure.
I want to bring it back, reel it in a little bit more. Before we get there, in terms of the regulatory aspect, let's kind of we discussed a little about traditional secondary markets, how it works for those that don't know. We have the history now in terms of Bitcoin. We know what happened in 2017. We're starting to think about the evolution of digital assets and other cryptocurrencies. Walk us through kind of what I usually call this the life of a trade, right? So we could go back and forth on this. So we have the exchanges, right? People use the exchanges to execute trades on various cryptos. What next? What are the other pieces of the infrastructure? What are the other pieces that need to be put in place as we start thinking about secondary markets, particularly for these digital assets? What are the other pieces of the infrastructure that we need to put in place, and how, in your opinion, should they be? What is that? What are the missing elements, and what do we need to get in place?
Well, I guess clearly the biggest chunk of that, and then that's not only the thing, and it's a little bit different from the regular capital markets in the sense, I mean, I actually started a new desk in London within Morgan Stanley, and I had to actually work from the front office all the way to the back office to make sure that they were going to meet the Japanese clients' needs before the actual trading with the Japanese clients started. And in the crypto world, it's a little bit different world. It's all digital. It's not at least in the U.S. it's not a regulated asset per se. So there are a lot of steps that we are skipping over. But regardless of what happens, because somebody owns it and somebody owns this thing that we can't put the paper on it, it's just a name, and somebody kind of bought it, somebody gave them money for it, and somebody sort of sold it, we do need, the biggest thing that we are talking here is a custodian. And the custodian is the sort of, think of it as the safe holding trust business for the digital assets, right? I mean, once the trade goes through and somebody owns it, the asset comes off the what we call hot wallet of the exchange. Somebody's going to have to hold it off the system, right? And then keep the record of who this belongs to, at what price, and when is this going to be moved. And the problem with the custodian is that, first of all, there are only so many custodians, the companies that provide this custodian service for the cryptocurrency today. And even those who actually provide this service can only do up to $100 million or so. Do you know how much money any given pension fund has? Several billion dollars. And just being able to put $100 million worth money into any asset, that's not big enough. And then that's if
regulatory, is it capacity? Why can the custodians only do that amount?
One of the biggest reasons, and then every institution has a reason to do certain things or not to do certain things. But quite frankly, a lot of them are still somewhat experimenting, if you will. And to keep the digital asset, it's not just about keeping the assets, but also internal employees' education and making sure that there's not funky business going on internally too. And in order to monitor that, they can only hold so much assets today. Right? I mean, think about it, right? We don't have the paper that is being handed over from one buyer to another buyer. Right? We are just kind of saying, okay, there's this sort of imaginary something out there where mathematically proven that somebody has it. What if you can actually mathematically prove by yourself that this asset belongs to me wrongly, internally stealing that? Right now, we need to build all that sort of internal infrastructure to make sure that no monkey business happens by the insider. And then unfortunately, a lot of monkey business, so we call, happens by the insiders. And that's not just digital assets. Yeah. That's like the case with any kind of cyber business.
Can I ask you a question? Who's the biggest custodial of cryptocurrency, if that's the right term to use? Who's the biggest right now? That's actually where, do any of you know?
Kingdom is the one that has been in the business from the beginning, but there are big ones.
Is Coinbase also now?
Oh yeah, they're making the entry. Yeah.
They're acquiring one of the major.
Yeah.
Angel, did you say custody? I want to make sure I hear that correctly. Did you say custody?
Like a
custodian.
Yeah, the administration of the back office.
And is there an insurance cap on the custody?
So It depends on the insurance provider. So yes and no. I mean, if the insurance company said, go ahead, do $1 billion, that's not going to be an issue. The bigger issue, though, is that right now the insurance. So you know how insurance works, right? Insurance protects the buyers. Insurance doesn't protect anybody else who doesn't own the insurance product, right? So think of how this exchange works. Okay, exchange is where the money goes through, right? So exchange can buy insurance to protect their business, and that is going to protect their own theft. If somebody comes and steal or hack or do some kind of funky business to them, exchanges can be protected. But I, as a trader, I as a buyer of the crypto asset, if I get hacked while my money is still on the exchange, what do you think is going to happen? Unless the exchange takes the liberty to pay me back the money, and not every exchange does that. I completely lose all that investment money that I put on the exchange and then held it. A lot of individuals don't take the time to take the money out of the exchange, what we call hot wallet, and put into the cold wallet, because it does require a lot of technology. Right? You either have to put it on the stick drive, maybe all the digital codes, and you might destroy that jump drive, or maybe you put it on another hardware. You might lose the password. Unlike the exchange wallet, who is going to recover that password for you? So it seems like the somewhat safe place from that point of view is hot wallet. But if the hot wallet gets affected, exchange is protected for sure if they happen to have insurance or if they have a lot of protection money on their own so that they can protect themselves. But you're not protected.
The custody's insured?
Custodians probably do have insurance. Again, it's a business thing, so I cannot speak on behalf of the custodians. I cannot think why they wouldn't buy the business. Yeah, then that's effectively sort of a cold wallet for the investors, right? If you think about it, because that's off the exchange usually.
Yeah, so there's a really interesting case recently, and it's really in a headline everywhere. So look at Binance.
Yeah.
I mean, very well-known exchange. Someone really hacked into it. This is unheard of. I mean, anything can happen. But it's a really great case to look at it, And then obviously there's some insurance that covers that. But when you look into that, that's a really great case recently. It happened within the last month or so.
Yeah. So because I spoke for a while, I'll just wrap up this piece and then hand it off to Mike. So now, what is interesting that is happening, it's not in the US, but it's in another part of the world, and as part of regulatory, we'll go there later, is some of the countries are beginning to say, what if we are not only going to regulate the fintech part of this business, but we also will regulate some technology aspect of this business. That discussion is emerging. Who is going to do that? I don't know, because in financial services regulators, can they do it? But that's where we're going. Yeah. So
I want to talk a little bit also, about the traditional, just kind of the money center banks, our traditional banks. What role, and Mike, you can start out with you in terms of traditional banks. What role are they playing? What are you hearing? What are you seeing? What are you reading? What are you researching around how the banks are getting involved in this space, particularly?
Well, I mean, so the banks already have their established revenue streams and business models. So they're being strategic on what they're doing and telling the public. And also, I mean, realistically, who knows what they're doing behind the scenes? I mean, somebody could say that Bitcoin is a fraud, and then realistically, great. I also, and no, I have a lot of respect to what he built there with that institution is fantastic. I mean, they're the best financial institution in my opinion, just from what I've read and researched. And it's unfortunate when you say something like that, and then you're really, we have Quorum that we've been working on this technology. We have Blythe Masters who has been doing it for a very long time, and then she left for digital asset holdings. Fidelity is one of the biggest players right now. The stories of what they had digital assets over there, mining Bitcoin back in 2015, 2016. I think I even heard on a podcast, who knows if it's true or not, that they accept crypto in the lunchroom. Good luck with that though. 10 minutes, 20 minutes, 15 minutes to get your confirmation for coffee. That's a little bit of a scaling joke, but that's one of the biggest problems right now. I've been studying a lot of computing concepts. I come from finance, so really had to wrap my head around what actually is a blockchain. And what is the real value add here, and why is this so much different? That's why I think it's kind of a little, you have to look at this another way as well. Really, parallel financial markets and parallel financial system is really being set up. I don't know if you can look at it completely and translate it over to, okay, everything that we have that's being built has to fit into our paradigm here. More so kind of like Wayne Gretzky, skate to where the puck is going, or like Steve Jobs knew that once he was giving us this iPhone, the effect that it would have on our lives. Really, the whole grand vision from what I've seen with a lot of the programmers is Web3. Who's a programmer in here? Comes from computing. Anybody in the?
I think I saw a hand in the
Yeah.
back.
So I mean, the idea is basically that a lot of the structure and the pipes. I guess you could look at it this way: when the internet first came out, we were going through phone lines. And until the actual infrastructure was built out, say the fiber optic lines, and we did the cross Atlantic cables and everything of that nature and satellites, it was very slow. It used to have dial-up. And could you imagine trying to run the applications and the things that we have now on that infrastructure? No way. This is going to take a very long time to build out, but that's what we're starting to see with, say, a Fidelity, who is actually soon going to be launching institutional trading, I believe, for Bitcoin. I'm not sure if they're doing Ethereum. The best exchange from what I've seen that actually is holding their integrity and taking a strategic approach is the Winklevoss exchange, Gemini. They're firmly established. They also have the New York State BIT license. I think that they're really waiting strategically. A lot of these exchanges are actually under a lot of regulatory scrutiny. We're starting to see the regulators crack down. Bittrex, an exchange that I was even using, is forced to leave New York in June. Actually, if you don't get your crypto off of there, it's going to be lost.
All right.
Yeah. So if anybody has Bittrex, be careful. And I would say we're more likely than not going to see one of a household name get shut down probably within the next year.
But going back to the institutional side, so
Sure.
you're thinking J.P. Morgan, you got the Fidelities of the world, maybe some of the other big central banks we don't know because they're probably doing it below the radar. And it's also for you, Harumi. Any international banks, any other funds that are involved here that are playing a particular role in helping to craft this new paradigm, this new infrastructure?
I can address that. So I think you were asking about the traditional banks first. So I'll address the banks.
I want to understand how they're getting involved in this, right?
So I'll address the bank's business first, and then I'll go into some of the funds like hedge funds and whatnot. So on the bank side, what they are trying to do is they don't want to be behind, but they already have certain systems that work today. Is it cranky? Some of them are. But does it work? Yes. Is everybody trained? Absolutely. So there's not too much of an incentive for each individual bank to come forward and say, yo, we are going to be the first one to adopt this system, right? So very often, I mean, I go to talk to some of these banks to talk about potential, efficiency projects or something like that, and then everybody wants to listen. But at the end of the day, the conversation goes, well, we have a consortium. We don't have a project yet, but it's formed, and we funded the lawyer, we funded the project manager. All that we need is a project. That's the kind of a conversation that we have, and that's where most of the traditional banks are. And for example, like Goldman, they were all ready to go with the cryptocurrency trading, but they withdrew. Right? They're not. I mean, they're still kind of like watching from the sidelines. So it's not like they completely probably withdrew their intent, but they're not doing that. I mean, J.P. Morgan, Diamond famously said 2 years ago, less than 2 years ago, anybody who is going to trade Bitcoin at my firm is going to be fired. And now they're kind of trying to come up with some kind of token payment system, which probably is not going to be quite hitting for some time to come. Bank of New York, they have blockchain head who's kind of looking into what can we do. Oh yeah, we are going to do some kind of payment system because that will be utilized by any part of the bank. So we'll just kind of build internal system. So everybody has their own approach, not quite there yet in any kind of fashion. They're all looking. They formed the consortia. That's sort of like where they are. The funds. The investor side. So I actually know a particular hedge fund that has created the sort of offshoot company, subsidiary, if you will, just to work on the mining. They invested their own money, and they are inviting some of the big investors to take a part of it. Even then, they go only up to $300 million. Because of the size, they're actually doing their own settlement work today, instead of using the custodian, because there's nobody who can deal with $300 million. Because of their size, I mean, $300 million is nothing in a big scale of the world. But because of the size and because of what it is, I know that indeed the Fed has gone there to audit, and they were not doing anything wrong. They really only went there to study what it means, what it means to have a hedge fund actually being in this universe. So that's sort of like where the things are with the buy side. I mean, the Yale has injected some money into cryptocurrency. Harvard is right there with them, because all these Ivy League schools, foundations cannot be left behind from one another. So the money's coming in, but it's very selective at this point still.
Yeah, family offices and hedge funds have been in this for years because their agreements allow them to go into wherever they can, I guess, reach alpha. A pen pal of mine, or a buddy of mine that is over in the Netherlands, he works in a family office, and we talk about like trading. We've been doing it for a couple of years now. He was saying how they were in Ripple like basically pre-seed rounds for the ICO, and a lot of the family office conferences are starting up in New York, and they're interested because they're always looking for what is next, or what's ahead, or what type of esoteric market can we get into that might have the best risk versus reward. The big banks, from regulatory issues, it's not worth it to them. This is pennies. These markets are highly illiquid too. Anybody that's ever traded an altcoin, so say outside of the regular ones that are linked up to the cash exchanges, those are highly liquid order books. And even the regular order books, somebody just the other night tanked, I think it was on Friday, tanked Bitcoin $1,500 by basically giving up to 50 million, and then basically through the derivatives on what they call BitMEX, where you can go up to 100x on leverage, they made 250. So it was a $200 million profit there. That's how targeted, they were like a sniper waiting for that.
So I just want to add to that, because if that's the case, then how maybe these hedge funds have a certain tolerance for a certain risk that they're willing to take in this market that is still evolving and growing, and therefore they're doing it. But other more established, you mentioned Yale and Harvard and so forth. I mean, they're getting involved in this, and I'm assuming they're still involved. I don't know. How do they get comfort around that aspect, right? How are they living with the risk that some of these exchanges could get hacked, or their cryptos are not being protected? Are they doing it through funds? I mean, how does that work?
I mean, their pension fund equivalent, I can't remember like in which foundation it is, but like the Yale's foundation, Harvard foundation, I mean, they're bigger than a country. If they inject a couple $1 million into something called cryptocurrency, and then make them look like they are in the forefront, I think it's a small cost for them, to be honest. And also, like, it's academia. They have the academia background, so they have a lot of like brains kind of thinking through these things and then assessing risks and kind of figuring out what it means to really put some money into this. So I think that's where they're really coming from.
They're dabbling in this.
Yeah, I mean, they don't put their 50% of their assets into this. Yeah, no, that's not the case. Yeah.
Just to add, a lot of the hedge funds and family offices are doing high frequency trading. So realistically, their Sharpe ratios are unreal. Like, I met a guy that left 2 Sigma recently, and he was up 80% on the year. And you might say, oh, Bitcoin's up 100%, what's the big deal? But no, his Sharpe ratio, meaning he's risk adjusted, that is unreal. And also the endowments, they're thinking more so long term, because this is the volatility on digital assets, specifically Bitcoin, is unreal if you've ever looked at a quantitative chart for it. But over the long term, it has continually risen after, say, having an 80% drawdown. There's been at least 3 over the life of Bitcoin, and it's always come back. Not to say that it always will. I mean, that's ridiculous to think that, but it's kind of the structure of what this actually is and what's really going on.
Yeah, but the quants trading of a hedge fund and then a few other institutional investors are doing something different. I mean, yeah, they are looking at all the ratios, but what they're really doing is because of the very inefficient price discovery. I mean, they're actually trading through several different exchanges, trading through several different assets. So, I mean, that's not always how it works. But let's say that you buy Bitcoin, exchange it to like Ether, then you come back to Bitcoin Cash, and then come back to Bitcoin. Just by doing that, I mean, this year the margin actually shrunk quite a bit because a lot of additional investors began to notice it. But like in the last year, but just by doing that, they made a 30-40% return almost overnight.
Yeah.
That's what they were doing, and that's what really, so the frequency trading was a little bit different story in that sense.
Yeah, well, but that's why their ratio is the way it is.
Yeah.
It's because they're doing arbitrage cross exchange. Yeah, and it depends upon what your strategy is. Everybody has different strategies, and everybody has different time horizons.
Yeah. So let's flip the conversation.
Sir,
you had a
one
question?
thing,
Yeah,
I
sure.
met with the fund Morgan Creek just a week ago, and you know, they're the guys who took $40 million from the Northern Virginia Pension Fund. It's all in private equity blockchain. They're not trading the assets.
Private equity, but blockchain like infrastructure projects, or like actually buying Bitcoin?
No.
So like essentially VC, right? VC money,
It's
yeah,
all VC. It's
yeah,
all blockchain VC.
yeah.
Which
Yeah, I
is
mean, a lot of
primarily
companies
where
are
the
doing that,
major
yeah.
institutions use
Yeah.
it.
Yeah, I see.
Yeah, because at least the VC, you can kind of test, first what kind of companies you're investing into.
Let's flip it, because I want to spend some time on the regulatory side of it, and then I want to open it up for questions to get some other people's insights as well. Let's talk a little bit about regulation. I mean, we know in our current traditional markets, whether we like it or not, regulations play a big part in keeping that money, keeping that regulated, especially after the financial crisis. We're seeing how that has evolved. Again, this is an evolving space, as we've all can agree to, and clearly the regulators for different reasons, wherever you are in the world, and let's talk a little bit about the U.S. first, and then go internationally and see the difference. What are they saying? Where do they stand? How are they thinking about this? Let's start in the U.S. and then and expand on that.
So because we're going international later, you want to address the U.S.
wanna
aspect
do the
first, and then
regulatory
I'll kind of
the
overlay
US.
the
Yeah.
Sure, yeah.
the international picture on that. Yeah.
Look at that tag team. I like that.
Yeah, well, they're without a doubt taking their time, and that's because they can, realistically. I think that it's a complicated situation because of what the internet and technology has done to our global society. And I say global society for a reason, because the barriers of the world and the agreed upon borders and things of that nature are being redrawn or tested in a lot of areas, and a lot of technological innovation. And what are the top companies in the world right now? They're technology companies. Data is really the big thing that's the buzzword, right? Digital gold. There's a reason though, because of how much of our lives and how valuable that data is. So you look at, that's thinking of the mindset where we need to protect retail investors, we need to protect people, and we already have established markets. They're doing quite well, and a lot of incumbents who like their business models and have their margins. So let's make sure that we're looking out for them in one sense, but also maybe not truly seeing the entire global picture, which I would like to see at least a little bit more certainty or clarity, because it's been a little vague, but everything has kind of pointed into, if you're not Bitcoin or Ethereum, it seems as if it might be a security. At least that's kind of what Jay Clayton alluded to if you look at the Howey test.
Okay.
And FinCEN gave some great guidance recently. The CFTC and IRS have taken positions, but it's still nothing concrete.
Why
yet.
is that? What, in your opinion? I mean, we don't know. We can't get into the regulator's mind, but from what you're reading and what you're doing, is it to your earlier point? Is it a wait and see? Is it just a wait and see? Let the market let the markets evolve on their own, and then we'll come in and regulate.
I will opine on that if you're not going to say anything.
Well, she will.
I know you will.
I'm still establishing myself in the world, so I can't just go
All right.
after the establishment.
We won't hold you to it.
It's okay. You're young. You're forgiven. I have an opinion.
And then we'll come back to you, Mike.
And because we have some people in the room who are in the legal business, I'm not gonna
You're
go.
gonna keep you honest.
I'm gonna try not to sort of end up insulting some people in the legal business. But U.S. To be fair, it's a very difficult market. Like 7, 8 different regulators are fighting over one asset, whose asset really it's going to be, and then on top of that, to just lay over the things that each state is fighting over their own jurisdiction and regulations too. So I get that this is a very complicated market. I feel sorry, and whoever wins the war at the end of the day, they're going to get the fresh budget. You have to think about that way. So, in the US, it's gonna take a while. And to be honest, when was the last real written regulations that the US, one of those self-regulatory organizations or the financial services related organizations have actually written down something, right? To me, it's really unfair. If you don't write down something and then you start punishing people for not following something, that's actually a very unfair practice that anybody is imposing on anyone. So let's look at, just in case you haven't figured out from my name, I'm not originally from here. I'm from Japan, so I have a luxury of knowing what's going on over there pretty well and compare the system. So in Japan, they have only one regulator, Financial Services Agency. And so they have a luxury of one agency, one regulator kind of deciding when something new like this happens to kind of put together their acts and come out with the statement. At the beginning of 2017, to be specific, April, they already came out with the new set of rules to actually regulate this thing called digital assets. And so all the exchanges that are operating in Tokyo or in Japan are all regulated exchanges, no exceptions. If you can't check all these boxes that they have written down that each exchange has to follow, they cannot operate. As a result of that, a few exchanges left right at the beginning of that era. Kraken left, for example, and then a few others did. But this is probably like more of an initial pain that anybody goes through. Probably at the end of the day, the clearer regulations that we know at least what we're looking at, I think the business is going to win out that way. And Japan is just one example, and there are some countries out there, Estonia, Malta, all these countries that are beginning to emerge as the regulated but very user-friendly countries. If you don't know what you're doing in this country, who is going to stop all this the international business owners to just leave one jurisdiction to actually go there and start the company over there? And then we are seeing some of that already, right? So that's sort of the international regulation scene. And those of you who know the capital markets, I think you probably come from the capital markets of some sort, right? So if you are, for example, trading some kind of derivatives or swaps, there's an international sort of paper that you need to sign. It's called ISDA. I really do think that ISDA equivalent for the cryptocurrency is going to become necessary because anybody can trade this asset from anywhere, any part of the world. And there are some moves that are beginning to emerge in that field. I think the first international meeting of such kind with 45 countries representative attending, I think took place in Barcelona, was it? Early last year, if I remember correctly. And probably something is going to emerge, but again, a lot of different countries' ego is going to get in the way, so it's probably going to take a while, before they're going to settle, because one country is going to say, oh no, this is 100% security, and some people are going to say, no, this is currency, right? So it's going to take a while, but that such move is beginning to be seen. So, there are a lot of things that can be said, and there are a lot of things that we need to think about. It's going to take a while in a country like the US for this issue to settle. I think it's very unfair if you don't write anything down and say you have to follow what we tell you. That one aspect, I do have a complaint about the US regulations.
So
I'm going to play the other side too, which I see both. Who knows Binance? You mentioned it before, sir. So Binance, it literally launched in July of 2017, and at the end of the year, they were the biggest cryptocurrency exchange in the world. Okay, awesome, amazing growth. But at the same time, when somebody is able to make your username and deposit Bitcoin or crypto without giving KYC and AML verification, there's a reason why you grew that large. And that's a reason why Bittrex had to leave. People were making account names Elvis Presley, really, seriously. Go read the paperwork of why they had to leave. You're not following KYC, AML, a lot of these established things, and they do exist for a reason. Not to say that we should just try to make this new paradigm fit in our box, because we'll get left behind realistically if we do that as well. I see both ends. Maybe a flexible framework, that's kind of what I'm for.
Yeah. So clearly, I want to open it up for questions now, observations from the audience as well, because this is an evolving topic, right? This is more, as we think about the evolution, in my way, the evolution of where we started with cryptocurrencies, where institutions or different types of investors are looking to get into this as well, but looking for the protection, looking for the infrastructure to play in terms of how it's done, where the regulators stand. A lot needs to happen, and we're far away from that. We've been talking a lot about cryptocurrency, Bitcoin, Ethereum. How do we start thinking then at some point about different types of digital assets, right, that are coming out there, right? Taking a building and then creating tokens around that building, and then creating an exchange for that, and then ultimately finding the pieces, all the pieces of the infrastructure that would probably come in a collateralized mortgage market or something to that effect, into this market to be able to give the level of protection, transparency, trading, accountability, risk management, whatever else you want to say. So, lots to talk about. Let's just open it up for questions, observations, people. We'll start over here, and then we'll move to the gentleman right back there.
Great, thank you, Angel. So, when we talk about digital assets, with the collapse of ICO, obviously the more recent buzzword is asset tokenization, right? STOs. Now, I publish on that topic, but certainly what to hear other people's thoughts. So that we're still in this very early phase of STO, or asset tokenization. I personally am a believer in it, but with that said, if you believe in it, what are your thoughts on what needs to play out that will become more mainstream? That's question number one. The part two is, how long do you think it become more mainstream? So bottom line is, how do you think it's going to play out in terms of process, very high level? Part two, the question is, how long do you think it's going to take to become more mainstream? Thank you.
Anyone?
So I will take this one. How many of you in the room are actually accredited investors?
If you want to disclose that.
Yeah, no, great. Congratulations for like 10 of you. But for probably 70% of us, we are not. And that I think really addresses your question of what it takes for the STO to become a mainstream investment asset and how long it might take, because STO as it stands, only the accredited investors can invest into that, right?
Right.
If it's going to, yeah, exactly, in the US anyway. So let's if we start opening up to the rest of the world, some of the countries may not even define it as STO, so we'll keep it in the US. Yeah, so I mean that I think is really your answer. I mean, what are we going to do with that?
Well, I mean, you sort of. So let's give a duration, hypothetically, not even hypothetically, a range of duration, right? So how long do you think? If you believe, well, yeah. So there's a fundamental, right? Do you believe in it? Number one. If you don't believe in it, then all bets are off, right? So if you do believe in it, then how long is it going to play out?
I think you. Okay, go ahead.
Sure. Yeah.
Hey, listen. Bottom line is there's no right or wrong answer. Nobody knows. I don't even know. I mean, I have my thought process, but I'm not going to share it here. I want to hear you talk. More than happy to share it privately, but just more or less want to get people's thoughts out here. So.
Be careful what you wish for. I'm contributing to a textbook and my chapter is Digital Securities, Regulated Finances Transition to Web3. So essentially, this is something that I am quite knowledgeable about. I consulted for Augmate, which actually did a digital security issuance. They were one of the first 5 to do it in the US.
In STO?
STO, yeah.
Okay.
They use Securitize for the structuring, which is the platform. Okay, so essentially what we're looking at with STOs, which are also called digital securities, that's what people prefer because having the word token, traditional finance people don't love getting taken seriously. It sounds like Chuck E. Cheese. But realistically, you're looking at that could be a method of crowdfunding, which we saw. Okay, so a more regulated version of the ICO market, which was extremely messy. It's supposed to be within the regulatory confines of the government and the regulators, but at the same time, they haven't completely opined on that yet. So it makes it harder. We have STOs currently trading on, say, a platform like Open Finance. It's funny, I was actually just with their founder and CEO last week at the Grayscale Happy Hour. He's great. I think that they're doing some great stuff, but there's not much liquidity right now in these systems because the regulators and everybody else are still getting used to Bitcoin. Really, STOs are just right now, in my opinion, it's challenging just from what I've seen. But I see the future and I firmly believe in it. And I think that we're probably going to get the new method of securitization out of STOs eventually, because that is really, in my mind, the $1 trillion market that we could be talking about in the future. I firmly believe in that.
And I really think people are still kind of licking their wounds after the ICO. and part of that too is without the clarity behind, all right, so fine, we've coming out of this ICO, there's been a lot of people getting smacked around, because not just because losing an amount, but actually smacked around legally. People are being cautious, right? And I have a personal story because I inquired about an STO, and I spoke to some lawyers, and really they pull out every securities law. Like, I started with, all right, if you consider from here, this is what you got to do. If you consider from here, this is what you got to do. If you consider from here, it's what you do. And if you're using a token in this way, oh, by the way, you now got to be careful about being a money transmitter as well. So you're like, holy cow, you know what? Put that to the side. It just sounded like too much in one shot. And I think people just want to make sure that they dot their I's and they cross their T's. From there, depending on how regulatory clarity, then you might see the floodgate opening. I don't know. You might see people, all right, now we have some better clarity, right? We understand the type of investors that we could go after. What are the types of projects? We didn't even talk about projects, right? I think, another thing about licking the wounds, people there was so much crap that was put out there that it's about what type of diligence are we going to do to find the right projects, and then how do we finance those, right? And build the infrastructure around that. Infrastructure is going to be key as well. Part of what we were talking about earlier, for STOs to really work the way that they should, the infrastructure has to be in place. And that infrastructure has to come with all the bells and whistles that you need to make sure that me as an investor, to buy that, I'm getting some of that protection, or at least know that I'm not just going crazy. Yeah, it's still diligence, and it's still going to be, like any investment you do today, you throw money in it, and you know what, 5, 6, 7 years from now, it might go under, or it might go worth half, or it might go to 1,000, 10,000%. But it's, the infrastructure, I think, is a big part of how that's going to evolve as well.
So my question is, you mentioned you were doing your taxes. You were going through, the process of all of that. Why would you, if you're a trader and you invested in Bitcoin or anything else, why would you even bother to
Pay tax?
Yeah, pay tax.
Yeah. No, but it's a fair question. It's a really fair question. And if you,
Recognized currency. I could see if you turned it into fiat and you got some boatload, obviously there'd be a requirement because you made money and it's in your account. But why would you even have to? That's I'm trying to wrap my head around.
The IRS.
But if you didn't turn it into fiat, it's just there.
Yeah, because the IRS got, when we had the new tax law implemented, that crypto to crypto, like-kind exchange, loophole or gray area went completely away. So every time that you convert crypto to another crypto, that's a taxable event. Yes.
But I think only certain size.
The IRS. It's property in the IRS's eyes.
Okay, so it's considered like a capital, like real estate.
It's an asset, yeah. So it's without a doubt. I mean, they've been clear on that. If any government organization was going to opine on this very early, it was the one who collects our money. So.
But I think to address his question head on, I do believe exchanges are supposed to report the customer's activities if it's beyond, I can't remember the size, maybe you do. What was that? 40,000? Okay, so if anybody has more than 40,000, it gets reported. So that makes it, no matter what you do, that becomes taxable. Anybody who has less than that, I mean, why do you have to pay tax? I think because we're honest citizen and nothing more than that, I believe. So I think your question is very valid today. No, but your question is very valid. If you have like very small portfolio and you made some money on it, why would anybody report? Like, Mike did it because he's an honest citizen. Oh, maybe you had more than $40,000.
No, I was paying regardless. Pay unto Caesar what Caesar is owed. I was born here. I was educated here. I've been given incredible opportunities here, and I understand what you're saying. Also, realistically, as I said before, this stuff is not anonymous. It's pseudonymous. It's an accounting ledger. Everything can be tracked.
But my question, I just want to add to that piece though, because I don't know, so I'm going to throw this out there. Is the IRS clear in terms of the laws around all these? It's been defined, it's much clearer now than it was back in 2017 when all this craziness was going on? Have we seen that evolve?
They opined on it even before 2017.
Yeah.
They gave you the framework, and they don't have all the intricacies, but realistically, as I said, if any agency was going to, I believe it was 2014 that they issued, because people were making money back then. Yes.
Okay, so I have a second part to that. So let's say you lost, a lot of money in an ICO. Okay? You got burned.
Yeah.
Can you carry that forward as a loss on your taxes?
Up to 3,000
Per year. 3,000 per year.
So that's like one capital gains losses.
It's basically property loss, so it should be, right? It should be carryable.
Capital gains losses.
Either you write it off against this year's income, or if you don't have enough income, you just carry it over into next year, no?
I believe so,
Yeah.
but realistically, that would be offset against your gains too, theoretically, if you had any. And then you would roll it forward, 3,000 each year.
So.
I like this. We're really getting into it now.
But I think
Markets, you're getting taxed
of all the
information. That's from the record. Randy, you want to ask something?
Yeah,
A
so
question or an
kind
observation?
of observation and interested in your opinion. So I kind of look at the regulatory world a little different, which I know is not popular, but it's kind of legit. Just hear me out for a second, right? So you have the SEC lane. I like to talk in terms of lanes. You have a CFTC lane, and you might have a third lane, right? I think the regulatory landscape is crystal clear. Okay, if something is security, it's security. If something is a derivative or a future of a security, it is. I think the problem is that people today are kind of like looking at, certain those memes, like people are like, is it blue or is it green, right? There's no ambiguity right now with regard to the regulatory landscape. I think the confusion is people are trying to build some things in for their advantage, right? So to me, do we need a third lane? Maybe. I haven't been convinced, and I'm a securities lawyer, I'm not convinced we need a third lane, right? I think if you have something, just to your question, which is a fair question, if somebody bought an ICO that was a scammy ICO and you got ripped off, you pretty much want to treat it like it's a security, right? Maybe it was a utility token though. But what does that even mean? Do we even know what that means? So you have a token that people deem as a utility token, but it's effectively brought to the market like a security. It trades in the aftermarket, doesn't necessarily have value, or has value beyond utilization and consumption on that platform. Is that a security? Of course it is. So we're kind of playing this game of, we want to bring something to the market in terms of issuance, kind of bifurcating issuance from trading, which people confuse, okay? Something's brought to the market two ways. One is an IPO, or two is a private offering. So to your point about STOs, why don't you see a lot of velocity of STOs? Because most STOs, and I've done work on STOs, are brought to the market with Regulation D. Regulation D, 504, 505, and 506, there's a 1-year holding period. So unlike an ICO, I'm doing an ICO on Binance, boom, the ICO's done, it starts to trade. I do an STO Reg D, we sign the paperwork, you put it away for a year. That's why all these markets like T0, Templum, there's no velocity, so that's why there's no excitement about the STO market. But I think that we need clarification, agreed, in terms of maybe there is a purpose for utility token. I'm not sure of that, but I think the landscape is there. That's why you're seeing this movement of it to an STO, which is clearly, you're saying security in the name of it. But I think that we're trying to find kind of like cute little, what I'll call like wiggle room, like, oh, it's not a security or whatever. That's kind of bogus. I think these things predominantly are securities. Look, people care about 3 things in their life, right? They care about their health, their children, and their money. So clearly, if you deal with any of those 3, it's got to be regulated. if you want clarification, go to Bermuda. At Consensus last week, I met with Premier Burt, the Premier of Bermuda. They have very progressive crypto regulation, but they're a small country. I mean, we have the multiplexity, the alphabet soup of regulators here, covering money, currency, security. So I think the regulatory landscape is clear. I think, can it be better? Absolutely. Can we have clarifications, interpretations? But I think the lanes are there. We choose to kind of say, well, it doesn't fit in one of those 2 lanes. So
That's good observation.
interested in anybody else kind of comments about that.
I mean, I'm
Yeah, so I see what you're saying. I agree to an extent. Of course, there's always exceptions. It's about not necessarily where we are, but where we're going. Has anybody seen what happened with let's just say the New York City taxi cabs? Medallions.
Yeah.
Did you see that market, what actually happened? There was a great New York Times article on this and how really that was a bubble that got securitized and then burst when financial engineers came in. That is theoretically a regulated market that was and then you have Uber and Lyft come in. So what we're really looking at right now are computing trends. Industry 4.0 technologies are potentially going to be the Uber or the Lyft to what we already have established. And if we ignore it, then anybody will get left behind to an extent. Are you familiar with what a DAO is, a decentralized autonomous organization, and how it's already possible to actually have a DAO, so a self-regulating entity or company? Clearly, it got a lot of flack, and really a lot of the air came out of the balloon of the DAO after the Ethereum hack in 2016. But when you're bringing to the world these self-regulating entities, or say whatever else is really technologically possible, and you're worried about being within the regulatory confines, you'll get left behind. Look at a lot of the retailers right now and how much Amazon and some of these other companies, and I know that's a generic example that we all hear, but realistically, the World Economic Forum put out a great paper in November about systems leadership and why we need to be thinking outside of the box as well as what we have currently, because a lot of the bureaucracy, our government was shut down. I'm not even bringing in the politics here, right? Left, right, middle, center. It was shut down for 30 days. That is insane. If you really think about it, people not being able to get paychecks for their families. If this is the type of things that we have as a community and a nation, and then you have other countries that are more lax, or maybe they have one party, one system where they're just moving full speed ahead and they're spending more than we are as a nation on R&D, the power structures of the world are going to change. And it's important to realize that it's not just us. We're a global world right now.
one more question. And then, Cody?
Touch base on ICOs and STOs, but the new wave that has come out, which is very interesting, is IEOs, and it's kind of just replaced the ICO. Which
Can you, for the benefit of the people in the room, at least my bit, tell me a little bit, IEO, what
it's
is
an
it?
initial exchange offering, and it's been very interesting, and Binance has backed them, and it just seems like the same craze as the ICO craze,
Okay.
and it's very interesting to see that. I kind of wanted your take on where you think IEOs are headed, and do you think that's going to cause a mini bubble in the midst of things in the next few years?
If I have to opine on that one, and then I will, because nobody's shutting me up. On IEO is basically like an ICO in disguise. I mean, the exchanges are basically saying that we conducted the due diligence on these companies. It's okay. Yeah, you can issue them. You have a little bit more security. I mean, that's all that they're saying. And I know that during the blockchain week, a number of IEOs have been announced. I am guessing, as of today, probably the regulators will step in sooner rather than later to shut down most of these IEOs, because they're no more than just ICO with a little bit of protection.
What do you mean by that, with a little bit of protection?
Because the exchanges that are trading those ICO are saying that they actually conducted a due diligence on the issuer or the companies.
But how are they classified? Would they be classified as a utility token or security token? And if so, it goes back to you.
I do believe that they're trying to wiggle out that
wiggle room between.
Yeah, because we conducted and this is an ICO, this is IEO, it's okay. That's basically what they're saying out there.
That's
Yeah.
classified. Gotcha.
It's funny, there's a saying that we're rediscovering financial history in this new market. I mean, realistically, it's comical what they're trying to get away with in certain instances. Yeah, don't even get me started on. Yeah, I'll talk privately
Actually,
about some things.
we have to wrap up because we have one more thing before you go home. And you could actually get him started right after we finish this up. And I'm sure he'll share a lot more. A lot of great views. Join Millennials in Blockchain. Round of applause for Mike Rogers, please. And another great round of applause for Harumi here, who has given us a great perspective from the global insight. I really appreciate it. Thank you both for being up here, and thank you very much for participating. Your questions, very good questions as well. Don't move. Don't move. Diane, you're up. Let's go, guys.